Hello, everyone, and welcome to the Coinbase Markets Podcast. I'm your host, DavidDuong, the Global Head of Investment Research here at Coinbase. As always, I am joined by Colin Basco, who works with me in research. Colin, welcome back to the show.
Thank you. Happy to be back with prices looking a little bit better than where we left off last week.
Yeah, we're going to get into it. I think we're not going to focus as much on the price action today. Honestly, I don't know how much edge I can give people on this call anyway. We are going to be talking more about quantum computing on this call. I have a very special guest I'm going to bring out in just a second. But I do think that right now we're in a very technically driven market for crypto. And I think the attention still seems to be more on Bitcoin than the altcoins. Colin, I know that you look at the market structure very closely to kind of look at the pivot points for this kind of stuff. What are the key levels people should be looking at?
Yeah, so since last week, I went over some of the key levels, but this week in our latest report, we actually did a little bit more in terms of quantifying what the market structure actually looks like. So we developed a support and resistance liquidity map. And this essentially was developed using pivot points, which I mentioned last week, are just local highs and lows. But also now we're including volume. So volume matters because it allows for a proxy for conviction. We can see how much volume has actually been transacted at some of these key levels. And we looked at essentially breaking down market structure into these key levels based off of volume, looking at overlapping pivot points, like how many pivot points are clustering in a small range of price, because that also increases the sort of impact and significance of those key levels. And really quickly, just in terms of what those levels are showing, we're now seeing around 60K as a pretty meaningful support band. We saw a lot of buying in around that zone. It's a big psychological level. So I think we want to see that support band holding. On the resistance side, we're seeing around 82K. So 82K, that hasn't really changed. That does continue to be a pretty key pivotal zone for Bitcoin for us to see any further breakout above that zone. And as I mentioned in last week's podcast, I think that the higher probability is generally going to be trading the breakout because that involves an active repricing of what the sentiment is. It usually will require some sort of catalyst. We're not really sure what exactly that bullish catalyst will be right now, but we're hoping for that. So I think that's probably a pretty quick wrap in terms of what I'm seeing on prices.
It was interesting because we did see, at least intraday, Bitcoin hitting some of those support levels that you mentioned. But I think that there's a lot of very low confidence, I should say, in terms of what market practitioners are kind of seeing at this time. And I don't know, I think that it's going to be a very busy macro week as well. And I'm not sure because it seems to be more of a momentum trend kind of market. If you're running a systematic trading strategy, I think you're doing probably much better than a long only kind of strategy right now. But of course, we've got a weird kind of week structured with, I think non-farm payrolls in the middle of the week, CPI did cap off the week. I think that's also going to be throwing in some strange dynamics. But I want to kind of go into our core conversation today because we've got a very special guest. We've got Alex Pruden from Project 11 joining us. Could you bring out Alex here? So Alex, for listeners who don't know you yet, maybe you can give us a quick version of your background and tell us what Project 11 is building in quantum computing.
Sure. Yeah. Maybe the Coinbase tie-in. I was an intern at Coinbase 8 long years ago. So that was actually my first professional role in crypto. It was right after graduate school. Prior to graduate school, I'd been in the Army and I got into Bitcoin there, Coinbase, and then I was at A16Z as an investor before becoming an operator. I worked at a prior blockchain startup prior to Project 11, and now I'm at Project 11. So what is Project 11? Really, Project 11 is a company that's built, really to exist at the intersection of two, what I think trends that are going to define the future of finance. So one is the obvious one, which is blockchains, right? So blockchain adoption over the last 10 years has increasingly reshaped finance. I'm sure the listeners of your podcast are no stranger to things like stablecoins, et cetera, and Bitcoin obviously being issued as an ETFs now. So I think blockchain rails will continue to proliferate. But the second major phenomenon that I think people on your show or listeners of your show may be less familiar with is quantum computing, right? So quantum computing is a very misunderstood concept generally. But it does have a relevant impact on blockchains in particular and cryptography more generally. And so what we do basically is future-proofing future building. So future-proofing digital asset networks today against the potential threat of a cryptographically relevant quantum computer. But beyond that is also thinking about ways to leverage quantum mechanics to make the blockchain networks and the cryptography underlying them more robust and resilient into the future. So that's kind of a quick TLDR on Project 11, what we do and who I am.
Yeah. And I think this is so meaningful because obviously there's, as you mentioned, like so much misinformation out there about quantum computing, the timelines, everything. I mean, obviously there's a ton of FUD here. And if you've been in the space, which, you have, so this for a fact, like always seems like there's something in the cycle that people are always like, hey, like Bitcoin isn't environmentally friendly, or like, Bitcoin is this or that. And it's like, okay, is this another in a long line of things that people push back on, a reason for them not to buy Bitcoin, or is it something more meaningful? I think that's what we're here to unpack. I think there's, a lot of FUD that I would like to dispel, but maybe just to kind of start from the beginning. What is quantum computing? Like, you obviously know this inside and out, but just kind of tell us in plain English, what makes this different from a normal computer?
Yeah, so quantum computing is a different computing paradigm that leverages quantum mechanics. So quantum mechanics is a foundation of really our understanding of the physical world, right? So it's the most accurate physical theory ever devised by people, right? So it describes the physics of the very small, right? And it basically encompasses some kind of counterintuitive properties, right? One of these properties, for example, is called superposition, and it's this kind of concept where you can have these particles that sort of exist probabilistically in two different places at once, right? And so some superposition and other quantum mechanical properties aren't really things that exist in the world of classical computing, which is implemented using semiconductors, right? What is a semiconductor? It's like on, off, on, off. There's not really a world where it's like on and off, right? That doesn't work. But in quantum computing, that is kind of what it's like. And, that's an example of some quantum mechanical properties that are unique. There are others, but the, kind of TLDR is these unique quantum mechanical properties can enable algorithms, functions effectively that computers can perform that no classical computer can do. Now, in practice, the primary algorithm that people know and talk about is one that's related to factoring large numbers, right? This is called Shor's algorithm. So, I guess maybe backing up just slightly, history of quantum computing, theorized in the 80s. People were like, this is cool, I guess. We can simulate the quantum realm. What do we do with that? And this guy named Peter Shor in the 90s, so the 80s, that was theorized. In the 90s, Peter Shor at MIT basically came up with this algorithm called Shor's algorithm. He's like, hey, you can use a quantum computer to solve a real problem, not just like model physics. And that was factoring large numbers effectively, right? There's a couple variants of this factoring large numbers. I'm not going to get into the technical terminology, but that class of problems basically underpins most of what is called asymmetric cryptography, where this is like, we have a shared public, some shared public knowledge, and then maybe I have a secret or you have a secret, and then we can like exchange information on that basis, right? And that's, distinct from what is called symmetric key cryptography, which is like, you and I share a key, and then we can like exchange information because we both have the same secret. So that's why it's called asymmetric, right? And so this, without getting too technical about the cryptography, the underlying hard problem that enables like me to give you some public information but keep the secret is this factoring of large numbers, or the fact that factoring large numbers is hard for a classical machine. But with Shor's algorithm, it's very easy. So as a result, people looked at quantum computers and they're like, hey, these things are going to be really relevant for cryptanalysis, right? And for breaking cryptography. And the question was always when. And yeah, so that's kind of where we are today, is still asking when. But, over the last 25 or 30 years since Shor's algorithm came out, there have been enormous strides made in developing a practical quantum computer. There are also enormous challenges that still remain, but hopefully we'll unpack all that in the show.
Yeah, and I think that there's a lot to like what you said already, and I think from a layman's perspective, I mean, some of these concepts like quantum entanglement and, other things, like can you be in a state, like more than one state at the same time? I mean, like, it's funny because when you bring up to people of like, oh, do you understand Schrodinger's cat? They're like, oh, I get that concept. I'm like, well, it's the same thing. That's exactly what you're kind of talking about. But I do find like Peter Shor, like in the Shor's algorithm, to be fascinating because like once upon a time, I don't know if like most people realize this, most of the encryption is broken through brute force. I mean, it's just like trying different things over and over and over again. And like, like Peter Shor, like, I mean, he created his concept before quantum computers were a reality. It was more like, hey, like if it became reality, you could use this algorithm. And then that like it seemed like it got the ball rolling. But maybe kind of like start from another, like, so the next incremental step would be like, well, what about qubits, right? Like I think that like it kind of is built into like kind of the conversation you're talking about. It has been something that people have talked about. Can you just describe what a qubit actually is, where we are with qubits? You know, like why does it matter, for example, all that kind of stuff.
Great. Yeah. So this is like a kind of a natural unlayering of the onion. And this is a very big onion that is quantum computing, but hopefully, you know, we'll go some ways into demystifying this concept for your listeners. So, okay, qubits. Great. So we talked about quantum computers. I know what a computer is. I know what quantum is. Put them together, we got a quantum computer. So what does that mean? Classical computer has bits. What are bits? It's zeros and ones. And this is basically, you know, things that, you know, process, you know, it's data is stored in this form of either a 0 or 1, and these things are, you know, arranged in different ways to be memory, to be registers, and whatever. Okay, so I need to basically take qubits now. Okay, and what differentiates a qubit from a bit? Well, you know, it's kind of a fuzzy definition, but at a high level, it's a quantum bit, right? The quantum bit can effectively take advantage of these quantum mechanical properties that a classical bit can't. Like again, the classical bit can't be on and off, but the qubit should be able to be. So one really important thing to note at this point, this is like, I think this is something that I think most often gets missed. Classical bits are effectively, we just take for granted these days that they're implemented in a silicon substrate, right? My phone, this computer that we're having this conversation on, everything is effectively silicon-based semiconductors, right? So that is what like bits, when we think about bits, that's effectively how we visualize them. Although there's no reason why you couldn't create a computer out of a different substrate, create bits out of something, you know, using, I don't know, other things, right? Other materials. So quantum is actually in this it's in like the very early phases that classical computing went through when people tried to figure out what was the best substrate, right? And so qubits can actually be realized in many different ways, right? So kind of the classical way that you realize a qubit, people may have come across, you know, in reading a quantum computing article, like these big chandelier looking things. It's like quantum computers, and there's like the chandelier thing. So that houses what are called superconducting qubits. And basically these are subatomic particles that are cooled down to near absolute zero. And that's actually why you see this giant chandelier. The chandelier has like nothing to do with the computer. It's just a giant refrigerator, effectively, to cool down these qubits down to the point at which they're superconducting, because that's where these quantum mechanical properties are kind of easier to observe.
You have to isolate them in such a way where like if even like it gets nudged slightly, then it will not do its job.
Right. And this is actually a great call out to like why engineer this thing like this. Unlike a classical bit, quantum bits, qubits are very, very sensitive to the environment, right? And this has actually been the primary reason why it's been such a challenge to actually realize a quantum computer, because any type of interference or, you know, kind of any bump, you know, risks basically knocking over the entire computation, because it causes, you know, like, and you can kind of think about it this way, right? You have these states where they're entangled, right? So two qubits can have like state that's correlated, and then they're maybe in superposition. So like, is the state this or that? Those things really rely on, you know, basically being encased in, you know, some kind of stable environment, right? Because without that stability, effectively causes what's called system collapse, which then just revert. It's not like the thing doesn't explode. It just reverts back to being a classical computer, basically a really expensive classical computer. So you kind of lose everything that you would otherwise get. So, okay, so these qubits can be realized in numerous ways. There's the superconducting architecture, which, you know, that's the chandelier things. And that was actually like kind of one of the first ideas for how to build a quantum computer. In more recent years, and this is actually like getting to kind of the, you know, large public companies or prominent startups, you know, there've been other ideas for how to implement a quantum computer. So one of them is using a technique called trapped ions. So there's a very large, actually it's the largest public quantum computing company called IonQ that takes this approach, right? And they use a combination of lasers and, you know, cooling devices to basically take ions, which are charged particles, and use those as the basis for qubits, right? There's all kinds of, I mean, there's basically a zoo of these different approaches, right? And all of them, okay, so why we even have this zoo? Again, it comes back to like, we need to keep this computation stable, but we also need to ensure that like whatever the physical layer of this is, we can scale, right? So you can, if you look at the superconducting architectures, one immediate question you have is like, okay, what I'm seeing in the chandelier is 100 qubits. How is it going to get to 1 billion qubits, right? Because how big does the chandelier have to be, right? So these are the considerations that come into play when when building these things practically. So hopefully that's helpful. So qubit, just to reiterate, is the fundamental unit of quantum computation, analogous to a classical bit, but for
I love that. And I think that a lot of people don't appreciate how complex physically the task of actually building a quantum computer actually is, which is why the progress hasn't been like immediate. It's like, oh, you're not seeing these things actually break encryption yet, because like it's difficult. And we're going to get into like what the real timeline is. I mean, actually, could you remind me like how many like qubits, physical qubits, I guess, do we currently have, like the most advanced of these quantum computers?
Yeah. So there's so the most number of particles that have been put in what's called an array, and they could be turned into qubits, call them proto-qubits, 6,100. So Caltech has, a quantum basically array that could become a quantum computer, 6,100 qubits. Physical qubits. That's built on a substrate that's called neutral atoms. I think IBM, Google, others have had, I'm not sure if Google got here, but I think IBM at one point had 1,000 qubit quantum computer for their superconducting architecture. I'm not actually sure what IonQ currently has, but call it in the low thousands is really, roughly speaking, what the number of qubits is today. And again, like you kind of got to parse, because in some of these instances, the qubits aren't really capable of doing every computation that a quantum computer could do. So it's a little bit of sleight of hand. I mean, this is the classic problem when you're evaluating, kind of up and coming technologies. You're always trying to parse like what apples to apples comparisons. But yeah, low thousands today in terms of physical qubits. Now, I want to make a quick note here, because what your audience may have heard before is a concept called a logical qubit. And I want to differentiate between a physical and a logical qubit. This is very important. So I mentioned a second ago that physical qubits are delicate, right? So physical qubits potentially have the, risk of collapsing if they have an interaction with the environment that's unintended. And by the way, if you can imagine scaling this to, utility level, that's going to be unavoidable. Okay. And people realize this, physicists realized this a long time ago. You're never going to have the perfect environment to run a quantum computer, right? One of the reasons for that, by the way, is that running the quantum computer takes energy. Energy generates heat. Heat ruins your absolute zero temperature. And so, and for the variety of reasons, you're never going to actually have this perfect medium that, the physical qubits will never decay. So you need to basically account for what is called error correction, right? So if like the way to think of it, the best analogy I can think of is like your quantum computer is a ship, it's a boat on the ocean. As the ship is sailing, leaks are sprouting in the bottom, okay, right? And basically, quantum error correction is the process of plugging the leaks as fast or faster, ideally, than they crop up. Okay. So now, if you do that, and how is that done? It's effectively done through redundancy. And I mean, it's more complicated than that, but like a simple way to think about it is redundancy. It's like, okay, I have one qubit, it fails X% of the time, so I'm gonna take 10 and I'm gonna put them together, and I'm gonna do some algorithm to figure out what's the value here, right? So you have basically redundancy, and so there's a ratio between these physical qubits to what is called logical qubits, which is kind of like, it's really like what is the true analog to a classical bit. Because with a logical qubit, you kind of don't have to worry about like, okay, the state is whatever I say it is, because the physical qubits underneath have all been built to basically guarantee that I can rely on this fact, right? Now, logical qubits have only recently been realized. And this was actually one of the major breakthroughs in the last couple of years in quantum computing was 2 years ago, I guess a year and a half ago, Google had this quantum computer called Willow. And Willow was only 105 physical qubits, but it used error correction to create the first logical qubit by correcting these errors at a point that's called below threshold. So in short, Google built the first ship that was able to patch leaks faster than they sprang up, right? And that was a real turning point for quantum computing, because up to that point, people knew that quantum computing was possible in theory. People understood there were techniques to possibly mitigate errors, but no one had ever shown and demonstrated that could actually be engineered. And that is what happened at the end of 2024, which is why last year you've seen a lot of dialogue and a lot more interest and uptake in like quantum computing and how quick this is happening. And because now it's really just a matter of taking the error correction from where it currently is today to, a few orders of magnitude better. And then, and this is we're getting to the point where I can dispel a big myth about quantum computing. You're going to be able, like, once error correction gets to the point that is robust and reliable enough, you'll be able to scale these systems very quickly. Like the bottleneck in building a large quantum computer is not putting more physical qubits in a space. It is, can those physical qubits actually be made useful? That is the entire point of error correction. So really the thing to watch for your audience, who anyone's paying attention to this, the progress in error correction will be the thing that makes quantum computing useful. And that will be what drives the timeline.
So on the topic of actually being useful, it feels really abstract to me right now. Can you give me a couple of like concrete examples of what quantum computing can do right now and what it could potentially do in a couple of years? Great.
Yep. So myth 2 is like a quantum computer is going to be like my smartphone, like a smartphone, could replace my smartphone. That's not how it's going to work at all. Like the way we use the term computer, but I think it's really more like that. Like in the industry, it's kind of more common to call these things QPUs, quantum processing units, because they're really specialized in the same way that a GPU is kind of specialized for certain tasks with parallel processing. QPU is going to be very specialized, right? And in fact, and so now the natural question is, well, what is it specialized for? So there's the algorithms that a quantum computer can run that are faster than a classical computer is a whole area of active research. But interestingly, still to this day, the most impressive example of a quantum algorithm that no classical algorithm can match is Shor's algorithm, right? So Shor's algorithm, the one that effectively can break the cryptography that underlies blockchains, is still the thing that is most dominant. And just to put numbers on that, for a 256-bit key, that's for your Bitcoin key, like to break that with a classical computer, requires running something. You're running your classical computer in time exponential in the key length. So I don't know, longer than the universe will exist, right? Whereas with a quantum computer, the time it takes is only polynomial, which in short can be potentially just a few years, right? So the delta between forever and a few years is huge, right? There's no other quantum algorithm where that delta is so big, which is why in practice, what all of these quantum computing companies end up focusing on and or building is systems that can do this. And that doesn't mean that's always what they will do. And as we discover new algorithms, as these quantum computers exist, I'm sure we'll discover new ways to leverage them. But today, that is the thing that, practically speaking, people build for, because it is the most tangible advantage that you can have with one of these systems.
So in the context of crypto, does that mean it's going to be scary because people could potentially guess private keys? Or where exactly do you see the risk specifically in crypto?
Yeah, so at a very high level, so like let's just imagine, let's snap our fingers, let's say quantum error correction is solved, we have a scalable quantum computer, and it could run Shor's algorithm. Well, Shor's algorithm is very devastating for crypto, especially, and by the way, it's devastating for cryptography generally, but I would say especially for crypto and blockchains, because the whole concept of ownership on a blockchain is predicated on me being able to sign a message using a private key that only I should know. Right. So if I have a quantum computer and I use it to basically find your private key, Colin, I then own your asset. Like anyone who has a quantum computer could theoretically like own everyone's assets, which means that the concept of ownership ceases to mean anything. So kind of at a philosophical and deeply technical level, that is the potential implication. Right. Now, of course, there's that's kind of at the end state. On the way there, though, I think there's kind of, various risks that need to get addressed. So the first thing to say is I think the first generation of quantum computers very likely is not going to be capable of very much. So I think the areas that are of highest concern are places where there are public keys that, wallets or addresses associated with public and private keys that have a very large amount of value that don't move very much, right? Okay, so what does this immediately call to mind? Bitcoin. Satoshi, he, she, they may be here, may be gone. They may not have access. So these things are just sitting there. And this is a significant amount of Bitcoin is sitting there, right? And if you count all lost Bitcoin, including Satoshis, it's somewhere estimated between 10 to 50% of the total supply, right? And, so this is there. These keys are not moving. They're not rotating. So if you have even a relatively slow quantum computer, it may not make sense to use that thing for anything. other than, spending a year or two trying to crack these keys, right? And this year or two, I just kind of pulled this out. But my point is to show kind of by example that this is a unique case where a long runtime may actually make sense for a quantum computer, or economically make sense to run a quantum computer, whereas it wouldn't in other cases, like breaking into someone's bank account, where keys are rotated much more frequently. There's much more security around, basically access to that bank account or moving funds. So that, I think, the short or the immediate term for blockchains, it's the difficult thing of these places where lots of value is stored in public keys, where these keys are exposed, right? So Satoshi being kind of the motivating example.
So you're kind of talking about long range attacks versus short range attacks. And I mean, maybe you can kind of go into that a little bit. But I mean, the bottom line is this comes down to what is the timeline? Because, you've pointed out Shor's algorithm a number of times. I think Peter Shor, I only a few years ago, maybe 2 years ago, he was like, no, this is a 40-year problem, 20 at best. This is not something that's going to happen anytime soon. And I don't know if he's changed his tune. I don't think he has. But obviously, people are more concerned that this could be sooner rather than later. I mean, what's the reality from your perspective? And maybe put that in the context of that long range versus short range attack on, say, Bitcoin or another blockchain.
Yeah, look, I think I kind of come at this with some basic assumptions, right? Basic assumption one, actually, let's start with some facts, right? There's $2.5, I haven't checked the markets today, but let's just call it $2.5 trillion secured by public key cryptography on blockchains, right? So that's a fact. You'd be very hard pressed to find any other use of cryptography where you have that much money concentrated. So effectively, the bounty for solving this problem, you could have, the upper bound of it is $2.5 trillion. So that is
if you solve the problem and let's say you cracked it, it would immediately not be worth $2.5 trillion.
Sure. Right. So of course there's what's the game theory and what would people do? Who knows? But the point being is this is a lot of money that potentially would motivate people to build this, right? And that is something that really hasn't existed. 10 years ago, I don't think you could say the same thing, right? So that is true. I think the other thing that is another, assumption that I think is based on historical parallels of other advanced technologies is the path of development of these technologies is often very complex. It's rarely linear. Let's just take an example of AI, right? AI has been around since the 80s. It's had multiple false starts. Even in the 2010s, people were like, okay, we've got AI and it's predictive algorithms for social media. And that's kind of okay, what else can it really do? And then OpenAI, LLMs, and now here we are, software development's fundamentally changed. I don't think you can go back 5 years ago and found many people that would have predicted that, right? And so my point here is that even as, obviously Peter Shor, many physicists, engineers, they're all individually very smart. I just think there's a limited amount that you can put stock in anyone's predictions in either way, right? So, okay, though, what is this? How is this relevant to people listening to the show? The argument that I would make is, look, we don't know exactly when this is going to happen. We do know that there's a lot of value at stake on chain. We do know there has been accelerating progress in quantum in the last couple of years. What does that mean for the future? We don't really know, but we probably do want to start planning and thinking about how we would mitigate this threat. And this is actually really, to me, the reason why I started Project 11 is because this is the other big difference with crypto. Unlike cryptography used in the government or your bank, or even as, for, internal emails at Coinbase, all of those systems are relatively centralized, which is to say that a CISO can basically just flip a switch one day and then, software updates happen down the line and everyone just turns on their computer and they're using whatever the newest cryptography is. That's not how this is going to work for blockchains, right? And why is that? Well, it's because, again, this is a distributed system with individuals who own the private keys themselves, right? So if Bitcoin, this is myth, I don't know what myth we're on, 3 or 4. Bitcoin cannot upgrade and secure you, anyone listening to this. Bitcoin can upgrade to offer an option for you to secure yourself. That is what Bitcoin can do in any of these decentralized blockchains. But every single person needs to send their coins to a post-quantum secure address type when that address type gets implemented. And this is true across the board for all of crypto, right? So it's every single key, every single wallet, every single smart contract, every single protocol. So when you start thinking about it in those terms, it will be a significant migration. And so this is one of the reasons why we really advocate strongly. Like, you combine these two things, right? So uncertain timeline, but potentially devastating consequences, relatively heavyweight, actually very heavyweight migration process. The risk of overlap there, if you don't get started soon, is potentially high. And so this is what we advocate for, as being prepared. And, this is maybe a good time to call out you guys and Coinbase. You guys have the recently founded, Post-Quantum Advisory Council, consisting of a lot of great folks, Justin Drake, Scott Aronson, others, experts across quantum and blockchains. Like, this is the right first step. This is the right kind of thing. People need to start thinking about this. I personally think the very wrong approach is to ignore it and say this is never going to happen. People are very smart. 100 years ago, or there were people that said that people would never split the atom, that it was physically impossible. And now here we are. We're potentially on the cusp of doing fusion, right, to generate energy. So I don't think you should ever bet against human ingenuity. And so as a result, I think we should count on quantum computers happening sooner or later. And because they're so existential to blockchains, I think it only makes sense for the blockchain ecosystem and industry to prepare for that.
Yeah. And thank you so much for calling out the Coinbase Independent Advisory Board on quantum computing and blockchain. Really needs to have a snappier title. But I mean, like, there are people who are far smarter than myself who are on that board, who are focused specifically on trying to find solutions for this stuff. They are specifically focused on quantum and blockchain, and they're publishing position papers on this all the time. I would encourage you, our listeners, to kind of go there and take a look at it. And I do actually want to unpack some of what you said about, like, how are we going to, start patching over this stuff and actually running the upgrades on some of these networks. But before I kind of leave the timeline topic, because this is a question I have, and I'm sure our listeners have too, because I think I'm pretty educated on this stuff, and I don't know what I should be looking out for. Because, I mean, what key milestones will convince you that we're getting closer to quantum being a real thing in the world?
Yeah, and I realized I dodged the timeline question of when will this happen. And I'll answer your milestone question at the same time. Look, I think so. Governments say 2035. So this is the U.S. government, UK, Australia. 2035, all classical cryptography has to be deprecated. That's within 10 years. I think it's as likely as not that there will be a quantum computer in that time frame. And I think that just because of the pace of progress in the last couple of years. And the amount of money that's going into space. This is the other topic we haven't talked about is, if you look at kind of the investment that's going into quantum right now, it is rivaling in some ways what AI investment looked like 5 to 6 years ago. So I think 10 years, potentially is a relevant timeline to consider that this could happen. I think the milestones, again, I'm going to go back to error correction. The error correction piece is really key. And this is something that I cannot harp on enough. Like, there's a lot of folks that you'll find, you may listen to hear takes on the internet that are like, oh, quantum computers can't factor 21 when they can factor a 16-bit number. I'll get up and be afraid. That's not how this is going to work. Like, it's like saying, if you look at a half-built car and you're like, the car can't drive, and so I'm not worried about this car. I'm not thinking about the car driving. But if you put the car together, it can suddenly drive. Right. This is maybe a bad analogy, but hopefully it's indicative. Like, the way you should think about these quantum computers is like half put together currently. So it's not going to be a case of like, next year we're going to have one that can factor 42, and the year after we're going to have one that because there's no reason for these quantum computing companies to invest in anything other than getting to the real thing. And this is the other challenge, by the way, of navigating these timelines. You touched on this game theory earlier. If someone were to potentially use a quantum computer to, let's just say, recover Satoshi's Bitcoins, that would tank the market. So maybe they don't actually have incentive to reveal who they are, right? Maybe there's incentive to keep these capabilities secret, because to do so would be the way to profit from it. This is certainly the case if you think about the other use case for cryptanalysis, which is espionage, right? So absolutely in espionage, you do not want your adversary to know your capabilities. So the challenging thing here is that as we get closer and closer to these potential thresholds, there are less and less reasons why we should expect to be, as the public, be appraised of the state of the art, which is, again, like, adds to the uncertainty around predictions, which is why we should prepare sooner rather than later. But yeah, the error correction and really that below threshold mark is the key thing. Going back to the metaphor of the ship, does the ship sail, and can it sail while patching leaks faster than they appear? And so that's been proven for the Google superconducting architecture, these other newer architectures that potentially have the possibility to physically scale beyond the Google computer. That's what to watch there. And I think if those other architectures from these other kind of startup companies, either in the privately held or public, can reach those milestones that Google's met, then I think we should expect that the timeline could potentially compress to just a couple of years.
So conceptually, how exactly do we get Bitcoin and Ethereum upgraded to be resistant? Like, for example, like Satoshi's wallet, no one has the keys to that. So how does it get migrated? How exactly does this work in practice?
Great. All of these networks are different. So maybe this is like blockchain, big bucket, Ethereum and Bitcoin, two different things. I'm going to tackle them one at a time. Ethereum is maybe a little more illustrative because there's a lot of smart contract blockchains, but let's tackle Bitcoin because it's the single biggest bucket of value. And it is kind of, in some ways, it's unique because of partially this reason. Okay, so what has to happen to secure Bitcoin? Okay, first off, right now, when you send a transaction on chain, you publish your public key. The public key is what is required to basically run Shor's algorithm. I can take your public key, which in the classical sense is fine for me to know, but if I have a quantum computer, then I can recover your private key. Okay, so in Bitcoin, actually, as long as you don't send from the same address twice, revealing your public key, you're safe. And if anyone has a modern Bitcoin wallet, I'm sure at Coinbase, you guys implement this, like you actually rotate, there's what's called a change address. So if I send Colin 5 Bitcoin and I have 10 in my wallet, I actually do 2 transactions in one. I do 5 to Colin and 5 to my future self, right? And one of the reasons why this exists, there's a couple of reasons. One is privacy, but the other is quantum resistance, effectively. And addresses in Bitcoin are hashed. So they alone are actually not vulnerable. So maybe just tip for anyone who's worried about this, who's holding Bitcoin, as long as you are not reusing the same address, you are safe against anything but a short range attack. And we didn't talk about short range attacks, but like, let me just say you're safe for now, right? The issue is more the things that are kind of these long range attacks, these areas where the public keys get reused a lot. And by the way, who would reuse public keys? Well, Satoshi's obviously gone, and they didn't reuse. Most of their Bitcoin is with an address type that was deprecated that reveals the public key kind of natively. But the other major category of player is actually you guys and exchanges and on-chain businesses, because you guys have consumers that send Bitcoin in to deposit addresses. You can't guarantee they're not going to send Bitcoin to the same address. In fact, that's actually what a lot of people do. They save the address, like, okay, Coinbase, this is the, oh, sorry, I'm zooming in. The Coinbase is the address. I've saved it and I'm sending it in. You guys have to spend from that same wallet in order to recover those funds, right? So for a lot of reasons, it's not possible to use the kind of native protection of Bitcoin. Okay, so what does Bitcoin need to do? They need to give an address type that is secured by a post-quantum, basically a post-quantum equivalent of the ECDSA signatures that today secure Bitcoin, right? The good news is that post-quantum cryptography and post-quantum digital signatures have been an active area of research for the last 10 years. As we've talked about, throughout the show, the quantum computing has been on the, people's minds for a long time. And in the cryptography community, people have been preparing for this, right? So there actually are alternatives that you can apply and drop in to potentially secure Bitcoin. The main challenge with these new algorithms is that they're I guess, less than ideal from, compared to what exists. And in particular, what's relevant for Bitcoin, these signatures are very large, right? So the impact of adding these new signature types in, assuming everyone migrated over to them, would be potentially a 10 to 40x increase in block size or a 10 to 40x reduction in throughput, all things being equal. So in short, there's like major impacts to the Bitcoin blockchain and its capabilities. Okay, that's thing one. Then you need basically a way for people to move funds from old address type to new address type. And so now this naturally begs the question, what do you do with people who aren't here, or Satoshi, where they're gone? I mean, I think this is one of the unique challenges that Bitcoin really has. And this isn't really a technical problem as much as it is like a community consensus problem. And it gets at the very core of Bitcoin's philosophy, which is what makes it challenging. There's 3 options with the Satoshi coins. We'll just use the Satoshi coins as examples. You can burn them, making them unspendable by anyone. You could allow for a quantum computer, whenever it exists, to recover them. Or you could, instead of burning them, option 1, you could take them and recycle them some other way, use them as mining rewards for the future or something. Those are your only three options, right? Really, you could even boil them down to two. Do you confiscate Satoshi's coins or do you not confiscate Satoshi's coins? There's obviously one reason why you would argue to confiscate them is because the impact of potentially a quantum computer harvesting 10% of its total supply and then immediately selling them on the market would be potentially devastating for price, right? Destabilizing for the ecosystem. The reason to not confiscate them is because, I mean, the entire philosophy of Bitcoin is not your keys, not your crypto, right? So this is like kind of, and by the way, like Satoshi's kind of the easy case. What about a wallet that hasn't moved for 15 years? Do you know that person's alive or dead? There's not like no one's name is on these wallets, right? So like you don't actually have any guarantee. I mean, even with Satoshi, you don't have any guarantee that they're not still here. So that's why it's a really tricky and messy issue that ultimately will have to get solved. Now, there's a bunch of proposals around this, and I would be remiss to not mention like BIP360, for example, some great work that folks inside Andurra are doing around thinking about the how to use Taproot to enable post-quantum signatures down the road. There's a proposal called Hourglass and some other proposals on the Bitcoin mailing list that have talked about, okay, let's give people a window to migrate, and if they're not around in 10 years, then we're just going to assume they're dead or something, and then we'll confiscate. So there's a bunch of solutions to this, but I guess the big TLDR there is just highlighting this is going to be a messy issue. Now moving over to Ethereum and like kind of the more smart contract ecosystem, there's kind of advantages and disadvantages. So let's start with the disadvantages. A disadvantage for Ethereum is it's using what's called proof of stake. Proof of stake is unlike proof of work. Bitcoin's a bunch of hashes, and I'm just going to quickly say, technically, quantum computers can break the security of a hash function, but for everyone listening to this, that is like 100 years past the signatures. So like, let's just forget about that for now. Okay. So like, yes, quantum gives some advantage, but like, it's not relevant. So generally speaking, Bitcoin proof of work is secure. Proof of stake, though, requires validators to basically have stake in the game and then constantly sign messages saying, hey, this block is right, I built this, whatever, right? So all those signatures are vulnerable. So there's this extra problem inside of the consensus that needs to get addressed. That's actually the primary effort. If you listen to Justin Drake, the Ethereum Foundation, and kind of their lead roadmap, that's a lot of what their focus is right now. So they have kind of this extra thing that they've got to do. Then the advantage and the other disadvantage of it, something like Ethereum is, like I said, key reuse reveals address reuse reveals your public key. Because Ethereum is addressed, and some people even have like ENS names, right? Like reusing your public key is quite common. The good thing about Ethereum and other smart contract blockchains is you can actually implement a lot of this post-quantum cryptography that I mentioned a second ago applying to Bitcoin in the layer of the smart contract. So you don't actually have to wait for the Ethereum Foundation or the Ethereum community to potentially give you a solution. People can go and implement their own post-quantum secure wallets today. And that's actually kind of what our near-term roadmap is giving people options to secure their value on Ethereum without relying on any kind of protocol upgrades. So that's the nice thing about Ethereum and other smart contract blockchains like it. There's a whole bunch of we can go down the list of all the other chains, and each of them have their nuances. But broadly speaking, I would say those are the considerations.
Well, I love this. This is so much like good information. And I think it's important for our listeners to kind of hear it. Unfortunately, I feel like we're coming up against time. We could probably talk for another hour about this. Maybe we need to have a part 2 of this podcast. But just to kind of close, is there like one mental model that you'd like people to kind of walk away about quantum? Like, how Bitcoin and Ethereum would kind of deal with it? Like, if you had to like create that mental model, what would it be?
Yeah, I mean, I think the mental model that I want people to walk away with is that a cryptographically relevant quantum computer, which is kind of the term of art here, is going to be relevant first for blockchains. I think it's just the value on the table means that is going to be the case, economically speaking. And there are things we can do today. There are solutions. There are possibilities to address this. And it should be everyone's priority, I think, or everyone should consider how to make those changes more of a priority in whatever context that they're in. Because the worst case scenario for blockchains is that we kick the can on this, we kick the can on this, we kick the can on this, and then suddenly out of a lab in like, I don't know, China or Russia or somewhere, this thing is out there and live. And then it's a panic, fire drill, everyone's rushing for the exits or trying to transition. That's the worst case scenario. So maybe you ask for a paradigm for everyone to keep in mind. Here's the anti-paradigm. We don't want this to be a last minute migration, right? And that's, I think, the most important key thing that I would want everyone to take away from what I've said today.
Yeah. I mean, that's an aggressive kind of scenario, but you're right. I think getting to work on it right now, obviously, that's what the Coinbase Council is trying to do. I mean, I will say that from the people I speak to in our security team, they think it's a more realistic kind of scenario to say like 10 to 20 years. But, it's important that to date, no serious crypto analysis has been demonstrated on any quantum computer. I think that it's a good time to actually bring leadership in here. Where can listeners follow your work at Project 11, Alex?
So I'm a frequent commentator on this topic, as you can imagine, on X. You can find me at Pruden08, 08. So you can find me there. I also, Project 11, we have a website, project11.com, and there's a blog there. We have a ton of extra detail. We scratched the surface. I mean, there's all kinds of implications like stablecoin networks, other things, all that's on the blog. Also, a lot more detail about quantum computers, logical qubits. So I encourage people to use that as a resource. There's also this really cool thing on our website called the risk list. The risk list is our it's like kind of our constantly updated tracker of exposed Bitcoin keys, right? So you can actually see at any given moment how much of the Bitcoin network is theoretically exposed to a quantum attack. And you can actually search for your own address and be like, it's like kind of Am I Pwned? Do you guys remember that website, amipwned.com, where you find out your password was stolen? So you can effectively have that interface and figure out, are you doing the right thing? So those are resources that we have on our site, and X is probably the best way to find content from me personally. And David, it was great to be here. Colin, thank you both for having me on the show today. I hope your listeners got a slightly better understanding of quantum computing and its impact on blockchains.
Alex, this has been great. And we definitely have to have you back on sometime to go into part 2 of this conversation. But with that, thanks everyone for listening. Please like and subscribe if you like the content today, and definitely, hit us up if you ever have any other topics you want us to talk about on the show. Thank you so much, everyone.
All statements and analysis correspond to the date of this recording. This recording is only intended for sophisticated investors. This recording should not be copied, distributed, published, or reproduced in whole or in part. Neither Coinbase nor any of its affiliates make any representation or warranty as to the accuracy or completeness of the statements or any of the information contained in this recording. The views expressed in this recording are not necessarily those of Coinbase. Coinbase is not providing any financial, legal, accounting, or tax advice or recommendations. The receipt of this recording by any listener is not to be taken as a giving of investment advice by Coinbase to that listener. The information in this recording is believed to be current as of the date of this recording and will not be updated or otherwise revised to reflect information that subsequently became available or a change in circumstances after the date of this recording. Investing in cryptocurrency comes with risk. Prior results are not guaranteed, and prior results do not guarantee future performance. The listener should consult their advisors before making any investment decision. Coinbase may have financial interests in or relationships with some of the assets, entities, and/or publications discussed or otherwise referenced in the recording. Any references to third parties, investment strategies, or digital assets do not imply Coinbase endorsement or approval of any third party investment strategies or digital assets or any website or content related thereto.